is that the U.S. economy accelerated to a modest pace. I think that really sums up the Fed. You know, there's a lot of activity going on, but it's just not quite enough. And we know that there's certain parts of the economy that aren't open, whether it's, for a variety of reasons. Some states are fully open, some aren't. But manufacturing still managed to grow a bit, even with supply chain issues. These are some of the headlines. We've seen some pricing issues, of course, speaking about inflation, and they don't suspect any increases in rates till 2022. And he said that a lot. As a matter of fact, one thing he reiterated today when he was speaking, Chairman Powell, is that he doesn't think, based on dot plots at the last March meeting, that there's really any chance that the members believe there's going to be anything going on with rates till 2024. I don't know how they could possibly see that far into their crystal ball, but that's what they're saying. Now, if you look at a week to date of 10s, you can clearly see yesterday was quite important. We held at 160, important technical level, and we moved a bit higher. Part of that, of course, the test of that was a good 30-year auction. Look at a month to date. Month to date, we're not doing all that great this month, and when you contrast it for what's going on in Boone yields look to close at the highest level since the 25th of February, and the dollar index, as you see, looks to possibly close at the lowest levels in about a month. And what's the reasoning there? It's because the euro currency is looking at the best level in over a month on its close. Morgan, back to you.
Rick Santelli, thank you. Let's get to Steve Leisman now for all of the details from the Fed's Beige Book. Steve.
Yes, let me fill in Rick's excellent report there. This is a Beige Book that is more bullish than the headline number, but has a whiff, stench, just an odor of inflation to it. Let me get to the details. As Rick said, the economy accelerated at a moderate pace. Consumer spending strengthened with a pickup in leisure and hospitality, travel, and that all came from easing of pandemic restrictions, including greater vaccinations as well as some other issues that were happening right there. Auto sales grew. Inventories, though, were restrained by the chip shortage. Manufacturing activity expanded, though, despite the supply chain disruptions. Employment growth picked up. More on that in a second. Job growth was strongest in manufacturing, construction, and leisure and hospitality, one of the hardest hit parts of the from the pandemic. Hiring remained a widespread challenge, especially for low-wage workers, according to the Beige Book. Wage growth accelerated slightly overall. There was a comment in there that employment expectations were bullish as well. Prices, something followed closely by the Fed, accelerated slightly. Input costs rose across the board. And let me give you one more here that I just read before we came on, and that was that prices overall, there were widespread reports of price increases, though not at the pace of selling prices, not at the pace of input costs. I will tell you guys, a very quick search find that the word disruption, which appeared for the first time as in supply disruptions, appears 22 times in the Beige Book.
Shepard Smith here. Thanks for watching CNBC on YouTube.